This is USDJPY. Today is Saturday, 16th of August, and we want to look at the daily range, our daily CRT and lower time frame dealing ranges for entries. So I'll do that and daily and maybe the 5th. So in the daily time frame, we want to look at this day, which is Tuesday 12th of August and Wednesday 13th of August. So CRT, we're starting with Monday, which was 11th of August. You'll notice this bullish candle printed, and then the next bearish candle swept the high of this bullish candle and closed below or closed within the range of the first candle. So this bullish candle will give us the CRT high and CRT low. CRT high, and we have the CRT low. So as I have said, you'll notice this next candle, which was 12th August, swept the high of the previous candle, or swept the CRT high and then closed within the range. So that means this gives us a CRT setup. And then another important thing you need to take note of is you'll need to have this happening in a key area or a PD array. So this is the PD array, this is the daily time frame, daily FVG or fair value gap. So this is a bearish fair value gap. With this candle closing below it, it means that we are going to look for sells in the third candle. So with that done, let me just do something small here. So with that done, again, let me just reiterate. We have this bullish candle and this bearish candle. The moment this bearish candle swept the high of the previous candle or a previous daily high and then closed below it, there was now a CRT high and a CRT low for the previous candle. This is the same as daily previous day low and previous day high. The previous day high was swept. Now we are looking forward to a bearish market for the next candle to sweep the previous day low, and also that becomes our target or take profits. And this is happening in a key area, which is the daily fair value gap you can see here. Now with that done, the next step is you want now to have this candle give you a dealing range. A dealing range, how do you determine a dealing range? You use the Fibonacci tool. Where's the Fibonacci? So we use the Fibonacci tool. We use the Fibonacci retracement tool right here on this candle that will give us that high and that swept the high and the low. So what you want is to have the discount zone of this area, which begins from here. What you want to have is the premium zone of this candle, and that is what we have here now. So this has finished its purpose. You can clear it. Now before you go to the lower time frame for entries, let me just rename this daily premium. So we are now marking our targets. The CRT low or the previous day low is also a target, and then we have also this as a target, the other day low as a target because it was never swept. Now with that marked, I can mark this as TP2, take profit, take profit 2. Now with that done, we are anticipating that the next candle will open, come into this daily premium and then drop. We will assume that this daily candle, as it opens, it is coming into this daily premium to form the high of this day, which is Wednesday, and then drop. So we go to the 15-minute time frame and see what is happening at that spot. So this is the 15-minute time frame. We can mark the new day open. Now we are looking for sales on Wednesday. So the new day opens at this around this, on this candle. So this is Wednesday new day open, and we are already anticipating for price to drop. So we are assuming that this impulsive move upside is going to form the high of this day, and then it will go lower, right? Now as this impulsive move is coming upside, you will realize it tags into our daily premium. Now we want to look for a PD array in this zone, this premium zone, where price is likely to react off of and then drop lower. And then we have the PD array we have is this fair value gap. It is massive, but it holds value. You will see that our price reacts off this now 15-minute fair value gap right there, right? Now we have price coming to this point and then price coming to this point and then reacting off that fair value gap. That means this fair value gap is holding value. Now the next thing to do, you are not entering at the close candles of this fair value gap. Instead, we are waiting for a change in state of delivery. And where is that change in state of delivery happening? We have this bullish candle closes inside this fair value gap, and then we have a series of down close candles that now will close below until we get a candle that closes below this bullish candle, and that is where now this happens. So this becomes our change in state of delivery. Change in state of delivery. Now this change in state of delivery is a confirmation. Delivery is a confirmation to us that price is now going to push lower. But now we will not enter at this point. Instead, we will look for an area of value where price is going to react off of. And there are three ways you can do this. The first way is to look for a fair value gap that will give us an area, a place where we can place sales, and that is the fair value gap. Another way is to enter at this this breaker. This is a breaker in the lower time frame right there, price dropping lower and then coming to this breaker, and then you enter. And then another way, which is usually one of my favorites, is you mark the dealing range high to the dealing range low of this series of down close candles that gave us this change in state of delivery, and that would be from this high to this low right here. This candle is the one that gave us this change in state of delivery, and reason is because it closed below this low. This closed below this low. Nice. Now that having happened, we want to mark now the premium of this dealing range. Premium of this dealing range is here, and now we want to look for entries. Where is this entry? Our entry will be at the retest of this the retest of this 15-minute premium. Let me just call it 15-minute premium, right? Yeah, so the immediately price closes below, giving us a change in state of delivery. Price retraces into this premium. The moment it retraces into the premium, you want now to place your sell right there. Stop loss, you can have a fixed stop loss of 10 pips, you can see 10 pips or just above this premium. Another way to have this stop loss will be to get the midpoint of this fair value gap and have that stop loss at that point right there. But a good 10 pip stop loss becomes a good area. And then now this is the Wednesday new day open. You can now set your targets. Your first target is this swing low that gave us this massive push to the upside, which gave us the high of the day, and that would give us probably a 3.56, or this low, which is 4.75, or the previous day low, which is also the candle range low, CRT low, that gave us this area, this trading setup, and that will give us probably a 6.91. Now if you look at the time it took for this trade to happen, this was at Wednesday 13th August at 3:15 a.m. and then take profit was hit at 8:15, which is 3, 4, 5, 6, 7, 8, 5 hours later. So now if you have the courage to hold this trend longer into the next day, because this Wednesday closes at around this point, closes at around this area, and now you have price still dropping and going lower, and you can see now we have this second target being hit because of this relative equal loss, and this relative equal loss is also the low of the previous day or the 2 days before this, and this relative equal loss has not been tagged. So that is the setup for daily CRT and 15-minute daily rank theory, or 15-minute change in state of delivery, or 15-minute premium for entries. And that is it, guys. You can have a look at this and see if it's something you can integrate into your trading system. That's it. Have a fantastic day. Bye bye.